Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, and I wanted to share something. I want to explain what a cap rate is in real estate. I think cap rate is a term that's thrown around typically in the commercial division or the commercial sector of real estate, but the reality is you can factor in and you can calculate a cap rate on any type of real estate investment. So I want to just talk about what is a cap rate. Well, first of all, cap rate is short for capitalization rate. It's the capitalization rate, which is a key financial metric that we use in real estate to evaluate a potential return on an income producing investment. So it's basically a rate that we anticipate that we would get as a return when it comes to an income producing property. It's calculated by dividing the property's net operating income. We kind of say NOI for net operating income. We divide that, and the NOI, which is the annual income earned from the property after subtracting all the expenses except the mortgage payment. Okay, so you take the property, you take the rental income or whatever income you're getting, could even be income off of a business. You take the income, you subtract all of your expenses except the mortgage payment. That is your net operating income. Then you divide that number by its current market value or the price that you're going to purchase the property. And that result will be expressed in a percentage. So let me kind of break this down. Let's just say that there was $120,000 net operating income off of the property you're thinking about purchasing or off a property you currently own. The net operating expense, which would be all income off of the income off of the property minus your expenses, except the mortgage payment, that comes to 120. That's net on investment. And let's just say that your property's value was 1.2 million. It would appraise at 1.2 million, or that's what you're going to buy it for. What you do is you divide 120,000 divided by 1.2 million, and that's going to equal zero point 0.1. You times that by 100, and that equals 10%. So for example, if a building has an NOI of 120, it's valued at 1.2 million, the cap rate would be 10%. Now, that's how you calculate a cap rate. Now, what does cap rate, the capitalization rate, what does it tell you? Well, it's really an estimate. It estimates the annual rate of return on your investment if you purchase the property with cash. If you were to purchase the property with cash, that is the annualized return that's estimated for that investment. Now, the higher the cap rate generally has the higher potential for returns, but it also has higher potential for risk. So typically, if you get something that has a really high cap rate, then that's a lot of times in an investment that's a little bit more volatile. And so there could be a counterbalance and there could be lower cap rates. Or sometimes when you get something that's a lower cap rate, that usually suggests that it's low risk and lower potential returns. In other words, you have a lower risk of downside, but you also have a lower upside potential. That's what it's like when you have a lower cap rate. So you want to figure out between higher cap rate, mid cap rates, lower cap rate, based on the investment, what is your tolerance for risk? If you buy very high cap rate properties, there could be some risk. If you buy very low, there could be modest returns. That's going to be up to your personal strategy as to investments. Cap rates are really used to compare the profitability of different real estate investment opportunities, to assess the pricing, to analyze market conditions, but shouldn't always be the sole factor in investment decisions. But if I was going to look at 2 to 3 different investments, I would calculate the cap rate for each one of them. I would then, in my mind, calculate what I believe the risk would be for each one of them. And then I would make a decision on which one's best for me based on how I like to build my investment portfolio. I hope you appreciate this explanation on cap rates. I'll come back to you with explanations on other terms soon. Again, I'm Greg Harrelson. You take care. Bye-bye.